Be Wealthy and Smart, episode 1416.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about, is a stock market pullback coming? Because stock market sentiment is very high right now. It's reading at the greed level. And there's a lot going on behind the scenes as we get closer to the election. As you know, the S&P 500 is just off its all-time high and up 21.98% for the year. NASDAQ is a little ahead of that, up 22.05% for the year. As you know, October can be a very volatile month for stocks, and we've seen some of the largest declines in the stock market's history happen in October. So we aren't quite out of the woods yet, even though we're halfway through the month. Right now, we're hoping third quarter earnings season is going to be strong and provide robust earnings that could propel stocks to higher levels into the year end. Terry Sandvin, Chief Equity Strategist at U.S. Bank Wealth Management, said, "For equity investors, these are the best of times and the worst of times. U.S. equity year-to-date performance remains superb and broad-based. Conversely, the wall of worry looms as valuations are elevated, election-related nuances remain, global tensions are heightened, and so on. Near term, there's much to like about the equity market. If you look toward the end of the year and beyond, we expect volatility to be more the norm versus exception." And UBS also talked about more volatility ahead. They said, "We maintain our view that risk assets have further room to run amid an overall supportive macro environment, but volatility could increase again as a range of economic and market uncertainties return to focus." Specifically, UBS pointed out three main factors that could boost volatility. One, uncertainty over the Fed's policy path, meaning they're not sure whether the Fed is going to cut rates or not. If they are going to cut rates, is it 25 basis points? Is it 50 basis points? I'm in the 25 basis point or 0.25% camp on that one for November. Number two, Middle Eastern tensions. Of course, that remains to be seen what happens there and whether those risks get elevated or not. And three, November presidential election, which has a lot of rhetoric attached to it, has some policies being announced, and that emotion sometimes finds its way into the stock market. But overall, what we've seen is the market broadening so that just not the top 7 largest companies are getting all of the funds flowing into them. And a lot of smaller companies and medium-sized companies, small caps and mid caps, are getting more opportunity and more support in the market. One tricky area really is inflation, because we're seeing inflation start to rise a little bit again as employment drops, which is the worst scenario and not something that we want to see. We don't want to see inflation coming back stronger and the job market weakening. Thomas Martin, Senior Portfolio Manager at Globalt Investments, said, "I think inflation is back on the table. People were starting to say, we don't have to worry about inflation anymore. We just worry about employment. But I think that now you kind of have to worry about that again." Yeah, it seems like we're not out of the woods on inflation yet, but we do have a lot more unemployment due to the port strikes, due to the Boeing strike, and due to the hurricane damage. Now, the stock market is generally going to move along with earnings reports. And what we're seeing for third quarter consensus S&P 500 earnings per share is that they've been revised roughly 4% lower coming into the third quarter. Wolf Research said, "Our sense is the large downward revision in third quarter earnings per share estimates can be largely attributed to several large energy companies who saw oil prices come down over the course of the quarter and before prices sharply rose due to geopolitical conflicts," said Chief Investment Strategist Chris Senyek. He continued, "Given the strength in the U.S. economy thus far this year, we continue to have a high degree of conviction in our 2024 and 2025 S&P 500 operating earnings per share estimates. So if earnings are robust, the stock market will follow suit. And even if we have a pullback in mid-October, which I'm looking for, we should be finishing the year stronger. And I think we've got a good shot at the Fed reducing rates twice, 0.25% in November and 0.25% in December. But we'll be following along and letting you know how that all turns out. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.